In this video, we'll show you why billionaires are quietly dumping Bitcoin for these three stocks. What you are about to see is a clear shift in how the smartest capital in the world is positioning for the next decade. Instead of chasing volatility, this money is flowing into dominant businesses with real cash flow, massive scale, and compounding power that works in any market environment. These are not hype-driven trades or short-term plays. These are long-term engines built to grow steadily while everyone else is distracted. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. The first stock on our list is Oracle, ticker symbol ORCL. Oracle is one of the most misunderstood large technology companies in the market today. Many investors still think of it as a legacy software firm with limited growth. That perception is outdated and increasingly expensive to ignore. What makes Oracle matter is not its past. It is its position at the core of global enterprise infrastructure right now. Oracle software runs mission-critical systems for governments, banks, healthcare providers, and some of the largest organizations on the planet. These are not optional services. These systems do not get turned off during downturns. They are deeply embedded into operations where switching costs are massive. That embedded position is the moat. Once an enterprise builds its data, workflows, and security architecture on Oracle systems, it becomes extremely difficult and risky to leave. This creates recurring revenue that is both durable and predictable. Billionaires value predictability because it compounds quietly over time. The real story, however, is Oracle cloud transformation. Oracle has spent years investing heavily in cloud infrastructure while the market largely ignored it. That investment phase is now turning into a monetization phase. Oracle cloud infrastructure is growing rapidly, driven by demand for database-optimized cloud solutions and AI workloads. Oracle's cloud offering is differentiated. Instead of trying to be everything to everyone, Oracle focuses on performance, cost efficiency, and database integration. For enterprises running large-scale data operations, Oracle often delivers better economics than general-purpose cloud providers. That advantage is becoming more relevant as companies look to control costs while expanding compute needs. AI is accelerating this trend. Training and deploying AI models requires enormous data throughput and low-latency access to databases. Oracle's infrastructure is designed for exactly that. As a result, Oracle has signed major long-term cloud contracts that extend years into the future. These deals create revenue visibility that most tech companies can only dream of. Financially, Oracle is in a powerful position. The company generates substantial free cash flow and uses it strategically. It invests in growth where returns are highest and returns capital to shareholders through buybacks. This disciplined capital allocation is one reason sophisticated investors favor Oracle over speculative assets. Revenue growth has re-accelerated as cloud services scale, while margins remain strong due to the high-value nature of enterprise software. Importantly, Oracle's cloud backlog continues to grow, signaling future revenue that is already contracted but not yet recognized. Debt levels are manageable relative to cash flow, and the company has shown it can comfortably service obligations while continuing to invest. This balance sheet strength reduces risk during periods of higher interest rates, another reason capital is rotating away from assets with no yield or cash generation. Oracle is also benefiting from regulatory and geopolitical realities. Enterprises increasingly prefer diversified cloud providers rather than relying on a single ecosystem. Oracle fits perfectly into multi-cloud strategies, especially for database-intensive workloads. So why are billionaires choosing Oracle over Bitcoin? Because Oracle offers something Bitcoin never can: cash flow, contracts, pricing power, and compounding driven by real-world demand. This is not a bet on belief, it is a bet on infrastructure that the global economy already depends on. Oracle does not need a new narrative to win. It simply needs to continue executing on cloud growth, which it is already doing. As more investors recognize this shift, valuation multiples can expand while earnings continue to grow. That combination is how wealth compounds quietly. Before we move on to the next stock, this video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move to the second stock, and this one sits at the absolute center of the modern digital economy. Taiwan Semiconductor Manufacturing, ticker symbol TSM. Taiwan Semiconductor is not just another chip company. It is the backbone of advanced computing. Nearly every major technological shift happening today runs through this business in some way. When people talk about artificial intelligence, high-performance computing, advanced smartphones, or data centers, they are ultimately talking about demand for cutting-edge semiconductors. and Taiwan Semiconductor is the company that manufactures the most advanced chips on Earth. What makes this business matter is its near-total dominance in leading-edge semiconductor manufacturing. Designing chips and manufacturing them are two very different challenges. Taiwan Semiconductor specializes purely in manufacturing, and it does so at a scale and precision that no competitor has been able to replicate. This focus has created a moat that is arguably one of the strongest in the entire global economy. Building advanced semiconductor fabrication plants requires tens of billions of dollars, extreme technical expertise, and years of execution. Even with unlimited capital, catching up to Taiwan Semiconductor is not realistic in the near or medium term. The company operates at process nodes that others simply cannot reach consistently. That advantage compounds over time because each generation of manufacturing expertise builds on the last. The switching costs for customers are enormous. Once a chip design is optimized for a specific manufacturing process, moving it elsewhere introduces risk, delays, and performance trade-offs. As a result, the most important technology companies in the world rely on Taiwan Semiconductor for their most critical products. This reliance creates long-term demand visibility and pricing power. AI is a massive growth driver here. Training advanced AI models requires enormous compute power, which in turn requires cutting-edge chips manufactured at the smallest process nodes. Taiwan Semiconductor is the primary supplier capable of producing these chips at scale. As AI adoption accelerates across industries, demand for advanced manufacturing capacity continues to rise. Financially, Taiwan Semiconductor generates exceptional cash flow due to its scale and pricing power. While capital expenditures are high, returns on invested capital remain strong because demand consistently absorbs capacity over time. This is not speculative spending. These investments are backed by long-term customer commitments and structural demand growth. Revenue growth has remained resilient despite cyclical fluctuations in the semiconductor industry. What has changed over time is the increasing share of advanced nodes in the revenue mix. These nodes carry higher margins and stronger competitive protection. As that mix shifts, profitability improves even in mixed macro environments. Another key strength is balance sheet discipline. Taiwan Semiconductor maintains a strong financial position with ample liquidity, allowing it to continue investing through downturns while weaker competitors pull back. This counter-cyclical investment approach strengthens its lead when demand rebounds. Geopolitical risk is often cited as a concern, but sophisticated investors view this differently. Taiwan Semiconductor is considered strategically critical to the global economy. Governments and corporations alike have strong incentives to ensure its continuity. The company is also expanding manufacturing capacity outside of Taiwan, diversifying geographic exposure over time. Why are billionaires choosing Taiwan Semiconductor over Bitcoin? Because this is ownership of the infrastructure layer powering every major digital trend. Unlike crypto assets that rely on adoption narratives, Taiwan Semiconductor benefits from demand that already exists and continues to grow. Every advancement in computing increases the value of this business. This is not a company chasing trends. It is enabling them. That distinction matters. When markets become volatile, capital flows toward businesses with irreplaceable roles. Taiwan Semiconductor fits that profile better than almost any company on the planet. As AI, automation, and digital transformation continue to expand, the need for advanced chips becomes non-negotiable. Taiwan Semiconductor sits at that intersection with unmatched capability. That is why long-term capital continues to accumulate here quietly. The third stock is one of the most powerful technology ecosystems in the world. Alphabet, ticker symbol GOOG. Alphabet is not just a search engine company, it is a global innovation platform that touches nearly every part of digital life. Its dominance spans search, advertising, cloud infrastructure, artificial intelligence, and an array of moonshot projects that continue to shape the future. What makes this business matter is its ability to generate massive cash flow while reinvesting selectively into new high-potential ventures. That combination creates compounding power that few companies in the world can match. The moat starts with its core search and advertising business. Google Search handles the vast majority of queries worldwide, which creates unmatched reach, insight, and influence. The advertising platform connected to search generates recurring revenue at massive scale. Once advertisers invest in Google's ecosystem, switching to alternatives is costly and often ineffective, reinforcing the company's pricing power and durability. Beyond search, Alphabet Cloud has grown into one of the fastest expanding cloud providers globally. While competition is intense, Alphabet's differentiator is integration with its AI tools, search data, and productivity software. Customers using Google Cloud gain access to an ecosystem that competitors cannot easily replicate, creating a long-term structural advantage. Alphabet's investments in AI are particularly compelling. The company not only builds AI tools for enterprise and consumer use, but it also integrates them across every part of its ecosystem. From improving search results to enhancing productivity in workspace applications, AI adoption drives both customer engagement and monetization. That makes revenue streams more resilient and scalable over time. Financially, Alphabet continues to generate enormous free cash flow, which management deploys strategically. It invests in cloud expansion, AI, and infrastructure while returning value to shareholders through buybacks. Its balance sheet is among the strongest in corporate America, providing flexibility to navigate any macroeconomic environment. That is a key reason billionaires are rotating capital from speculative assets into a company that combines growth and stability. Advertising remains robust despite global economic cycles. Alphabet's ability to monetize attention with high-precision targeting ensures margins remain high. Cloud revenue is growing at double-digit rates, and the adoption of AI-based tools is accelerating monetization across multiple segments. The company's diverse portfolio ensures that no single market fluctuation can derail long-term growth. Alphabet is also a business that can scale continuously without heavy incremental costs. Once infrastructure and software platforms are in place, adding new users or services has minimal marginal cost. That is classic compounding economics, where scale generates outsized returns over time. Why are billionaires quietly moving money from Bitcoin into Alphabet? Because this is ownership of the world's most influential digital ecosystem, with cash flows that are predictable and growth engines that are accelerating. Unlike crypto, the value here is not tied to belief or speculation. It is tied to real demand, real infrastructure, and real monetization. Capital flowing into Alphabet represents a preference for certainty, scale, and technological dominance. The company is positioned to continue winning in the cloud, AI, and advertising markets while exploring new frontiers that could redefine its growth for the next decade. All three of these stocks share critical characteristics. Oracle compounds value through enterprise adoption and cloud transformation. Taiwan Semiconductor dominates a critical infrastructure layer powering global technology. Alphabet combines scale, monetization, and AI-driven growth across multiple sectors. Each is a cornerstone in its respective industry and provides predictable compounding potential that speculative assets cannot match. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. I want to hear from you. Which of these three companies do you believe has the strongest long-term competitive advantage, and why? Share your reasoning in the comments below so we can start a discussion. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important financial investing update. Thanks for watching, and I will see you in the next one.